Hey guys, it's Ryan, finding a path to financial freedom for the self-employed. Isn't it funny how much things can change in so little time? Since the time my first show aired a little more than 2 weeks ago, my crypto portfolio has taken a nearly $30,000 hit. And believe me, as a relatively new crypto investor, I'm bricks. It doesn't help either that everywhere I look, my fellow YouTubers and the media at large are capitalizing on this fear in the market by dropping what feels like an endless scroll of clickbait about what could be the end of crypto. Well, let me be the first and maybe the only YouTube finance channel guy to be totally honest with you. If you aren't a crypto vet, and maybe even if you are, this is a scary time, and it's okay to be worried. But while it can be very stressful for some to endure these ups and seemingly endless downs, we could all benefit from a little perspective. So let's get some, shall we? In the comments on a recent video I made discussing the value of NFTs, the community came to life. Who knew that was such a hot button topic, am I right? In the string of back and forth, I got into an engaging conversation with a new sub named Steve. Now I'll spare you the dialogue as it's all out there for your review should you care to read it, but in a thread about the current state of crypto, I thought he said something very profound. I don't know if Steve coined this phrase, hell, he probably read it out of a fortune cookie for all I know, but nevertheless it inspired this video. In his words, when in doubt, zoom out. Steve's take is great advice in that as bad as things look today, it's easy to forget how good we've had it over a relatively short amount of time. Of course, for people who jumped into the market around the all-time highs of November, asking them to take a step back for a broader view might provoke them to hit me. But even for them, I believe that keeping calm amid chaos is the only way to get through this time with your mental health intact. For the crypto noobs in the audience, of which I still consider myself one, the dramatic drop in the price of Bitcoin, which as of this taping is down almost 50%, on top of what feels like an equally dramatic decline across the crypto market as a whole, it's easy to want to start freaking out and head for the hills. Cash out while you can and don't look back, right? And while I suppose that's an option, did you realize that the price of Bitcoin was lower than we are today just 6 months ago in June of 2021? And 6 months before that, back in January of 2021? It's the same thing. I bring that up, not to say that the decline is a good thing, God knows I'm not happy about it, but for a little perspective. 2021 was a wild year for cryptocurrency, and if we use Bitcoin as a representative for the broader market, we saw highs in the stratosphere from where it was even 2 years ago in 2020. But declines like this do tend to happen sort of cyclically, and while there may be room to argue there are some extenuating circumstances in the ether this time, rapid growth and rapid decline have more or less been the hallmark of crypto investing. Nonetheless, if we jump back to Steve's point and zoom out a tad, taking a look at Bitcoin over the last 6 months, the last year, or the last 5 years, you can see we're actually still beating the average return of the S&P 500. By a lot, depending on how early you got in. From January 2021 until today, despite both substantial gains and substantial losses, Bitcoin is still showing an overall gain of about 12%. Of course, that's chump change relative to the 100% gains you could have cashed out in mid-November, but you're still outperforming the stock market, which averages around 7 to 10%. I will hedge that, though, by saying we don't know how low crypto, or Bitcoin specifically, will go. I've heard numbers as low as 32 or 33,000, and fingers crossed we won't see any lower, but it's difficult to know. Here's the sad reality. We don't actually know why the crypto markets have been in decline. From the top crypto experts to the fattest cats on Wall Street, you'll get a bunch of opinions, but to say that anybody has figured it out would be an overstatement. That said, there are a few prominent ideas that are likely contributing to the free fall we're experiencing right now that are worth discussing. First, the number of actively trading wallets is down almost 20% from 1.2 million a year ago to about 970,000. This is an indicator that fewer people are actively trading Bitcoin. Now, I don't know if there's a single smoking gun here, but perhaps due to the increased cost of living these days amid post-pandemic inflation, retail investors have less disposable income to throw at risky and volatile investments. We're seeing both volume and open interest declining as well, which seem to support this theory. Additionally, institutional investors, given the news of the day regarding inflation and rate hikes, may be taking a risk-off approach and could be selling out of assets, raising cash, and taking profits while they watch for new opportunities. Another reason the crypto markets could be crashing is the obvious correlation between the crypto markets and the stock markets. Despite the decentralized nature of crypto, it still tends to follow the general trend of the stock market, meaning when stocks are up, crypto is typically up as well. And when the market swings wildly downward, you can expect a dip in crypto at the same time. To combat rising inflation figures, the US Federal Reserve has already announced plans for multiple interest rate hikes this year. We talked about this in an earlier video, but according to Jerome Powell, we're looking at 3 bumps of 0.25% at a time for a total of 0.75%. And recently I've heard reported talks of a 4th bump and beyond in 2023. The reaction to this decision has led to a wider tech sell-off amongst investors, with many rotating out of riskier assets that promise growth, instead looking towards value investing, which can involve buying shares in firms that won't be as harshly affected by the powers of inflation. By this logic, cryptocurrency will likely be the first asset that most investors sell, simply because it's the riskiest and most speculative part of most portfolios. The last, and perhaps most terrifying reason crypto could be crashing is that we could be nearing the end of a 4-year crypto cycle. Since the inception of Bitcoin and the many other cryptos that have followed, the market has almost like clockwork followed a 4-year cycle. Historically, just after each Bitcoin halving event, the value of cryptocurrencies surge, followed shortly by the end of the cycle, which leads to a catastrophic bear market that can last for years.
Now wait a minute. You said every 4 years, and the last halving event was May 11th, 2020. So by my count, we've still got time, right?
You're not wrong, but another, dumber explanation might be that in anticipation of this cycle ending, many investors have decided to sell their crypto assets. So what we're seeing is sort of a self-fulfilling prophecy. If everyone thinks values will drop because it's the end of the cycle, people will sell in droves. This sets off a chain reaction, which then leads into the next multi-year bear market. I'm showing my age, but do you remember that old game, Lemmings? Yeah, it's kind of like that. Of course, I have no idea what the future has in store for us, and I'll take solace, I guess, in the fact that no one else does either. For that reason, I wouldn't venture to make any kind of real predictions, but I will say this. I don't think that this bump in the road is anything like the end of crypto. In fact, I still think we're very early stage. When you hear these finance guys dropping numbers in the billions and trillions, it seems like the crypto market is huge. And it is, relatively. But in reality, adoption of the technology and participation in the markets is still very low. Again, relatively. There's an old saying that riches are made in recessions. So again, back to the idea of perspective, perhaps what we're actually going through now is an opportunity. If that's the case, it could be your chance to participate in the market while prices are low and while things are undervalued. You've probably also heard the saying, buy low, sell high, right? While we can't actually predict the bottom, many investors see this as a great time to double down on the dollar cost averaging approach. Now, I'll probably make a whole video on the pros and cons of that kind of investing, but the point is that you buy a little bit of an asset at a time, each day, week, month, or whatever, and by doing so, you keep your cost basis lower on average. Essentially, you're buying the all-time highs, but you're also buying the dips, so over time, your average is somewhere in the middle. Whatever you decide to do, stay strong, do your research, invest where you feel comfortable, or don't. Never risk more than you can afford to lose. Keep your chin up and pay attention to your mental health. In times of chaos, like this, it's easy to make irrational or emotional decisions, and often, at least when it comes to investing, those short-term actions can be the ones that cost you big in the long term. Thanks so much for being here. Click the like button if you haven't already. Also, click subscribe and hit the bell to be notified every time I drop a new show. If you find this content or anything on this channel valuable, share it and spread the good word. Get $10 in free Bitcoin when you buy or sell $100 or more in crypto at Coinbase at the link below. And join me here every Tuesday and Friday for more. We'll catch you guys next time.